Welcome to the book club interview. My name is Scott Hollister, your host. Today's guest is Nico Sanchez, who is an acclaimed real estate investment coach, mentor, and motivational speaker. He is the co-founder and president of DS Realty Solutions Limited and president of the Greater Than Group, a multi-divisional private equity real estate investment company. Nico's mission and vision is to help you create wealth through strategic real estate investments, to spearhead humanitarian campaigns worldwide, and to motivate, inspire, and drive others to achieve more. Nico is the author of Creativity Over Capital, where he writes about real estate investors who can create financial success using other people's money. Welcome to the show, Nico. How are you doing today?
Thanks, Scott. I'm doing great today. How about yourself?
I'm doing awesome, man. Every time I get to interview an author, it's always a great time. So I appreciate you coming on the show.
Awesome. Thank you. And I see you do this every week.
Yeah, so I read a book a week, and then I reach out to certain authors, and we'll try to recap the book and learn as much as we can. So
awesome, that's good.
Yeah, no, it's I read a quote one time that most successful people read a book a week, and it accumulates over time. So I was like, you know what, that's a good goal to try to tackle this year.
Absolutely.
Yeah. So you have a great book. So do you want to tell listeners about your path that kind of led up to writing it?
Yeah, so basically, what I found, I've been doing real estate for 5-6 years now. And then I started teaching and basically coaching other people to do it only recently, only about a couple of years ago. And then the number one question that I kept on getting asked by people was, how do you get started? How do you do deals for little or no money down? And it's just the same question that kept on popping up over and over and over. And I just thought I'd write the book and have a book out there that outlined a number of these strategies that I've used and my partners have used in the past as well, and put the answers out there for everybody to see. Because real estate, for a lot of people, I think it's this mysterious thing, and it's a lot of people don't really understand it. Most people are very traditional minded still, even it's 2018. But a lot of people are still very traditional minded, and they don't understand alternative investments such as real estate, which I've found has been the best investment vehicle for me that I've used. And I've done a number of things. I've even been on the online space doing some e-commerce and stuff like that. Yeah. And I think even real estate even beats that by far, from my experience. So everyone has different experience. From my experience, that's what I found. So I wanted to compile all the answers out there that for the questions that I've been asked for years. And that's what I wrote the book, and just to give value out there to somebody and sort of demystify the whole zero money down real estate thing.
Oh, that's great. And I think I aligned with you in that book. That's how I found you. I love creative capital. I think during the beginning, when you don't have a lot of capital, I think you have to find those creative ways to, build that success and reach that financial freedom. So
that's right. Yeah.
So, you wrote the book in 10 parts with an introduction on someone else's money. You talk about acquiring skills to reach a financially free lifestyle. So what skills do we need to develop in the beginning of our investing career?
Okay, so skills are important. I'd say sales skills, communication skills, listening skills. It's mainly, as you can see a trend there, it's all relationship skills, because everything is a relationship after all. Sales is also just a relationship. That's what it is. Mindfulness. You can call them a skill, but I think it's more, I would say it's more of a mindset change. And the mindset shift is really what's important, and what we need to get done in the very beginning is to have that shift in mindset. Because if we don't have that shift in our mindset, it doesn't matter how many, you can take the most intense sales training that there is out there, but if you don't have the mindset to accept that training, you're not going to learn anything from that training. You can pay thousands of dollars for any sort of training, public speaking training, everything else. You can pay people pay thousands of dollars for school, but if they don't have the right mindset to accept what they're being taught in school, they're not going to do too well. Like myself, I didn't do very well in school. So it all starts in the mind. It all starts in the mindset, and then your mindset will then influence your actions, and then your actions become your habits, and then your habits become your destiny. So it all starts in the mindset, but you have to decide to change that mindset. You have to empty that cup. Like think of it as a cup full of water, or dirty water. It's your old mindset. You have to empty that cup first before you can put new water in there and learn that new fresh mindset.
Yeah. Well said. I love how you start with that foundational, success and getting your mind right. I think that's, really key. And, in the beginning, we have a lot of fear, investing for the first time. So, how can we move past that fear and take action?
I think the main thing that sort of holds people back is their lack of knowledge in a particular subject. And if you don't know enough about a particular subject, you're going to see more tense, and you're going to see more held back to take that leap forward. So that's another reason why I wanted to put this book out there, is to put that knowledge out there so people have that tool and they learn a little bit more about what can be done in this particular subject, as real estate, to help them to get over that fear. So fear is not necessarily a bad thing. We don't want to be fearless, because there's no such thing as being fearless. Fearless is, by definition, without fear. There's always going to be fear in our lives, and the most important thing is to feel that fear and then just do it anyways. So having the right knowledge, the right amount of knowledge, and when I say the right amount, it's not necessarily 100%, because we can never learn 100% of something, especially before we even do it. So that's really the main thing there. It's to sort of picture yourself driving a car, like down a straight highway, and it's foggy outside, right? So if you picture yourself there, you can only see, say, 10 meters ahead of you because it's really foggy. Well, if you don't drive another meter forward, or another 2 meters forward, you'll never see the next meter, 2 meters, 3 meters, 5 meters, 10 meters ahead. And if you let that fear get a hold of you, you'll just stop there and you'll never get to your destination. You'll wait there forever for the fog to clear, and it's never going to clear, right? Because that's life. Life is infinite fog. We can never see past 10 steps ahead of us. We have to take that step forward to see the next step past that.
Well said. That's some amazing wisdom. I love that, taking that step at a time, and telling the listeners and all these new time investors that love, your book. I think it's important to lay that foundation. Like, you're never really going to be 100% confident, but, arm yourself with the knowledge so you can take that one step at a time and not get over your head. So.
Exactly. So learn about, 40% of something, and then start taking action towards that. And then eventually the rest will uncover itself as you move forward. So yes, knowledge is very important to initially help you get over that fear. But at the end of the day, it's up to that person individually to decide to do it anyways. Because somebody might only learn 20% of something and be courageous enough to take that step forward and take action. Somebody might need to be 60% on something. So at the end of the day, it's all up to the individual person. And their tolerance, their own individual tolerance. So I learned about 30-40% of something, and then I get excited and I take a step forward. Sometimes it gets you in trouble.
Yeah.
But a lot of times it works out for the best. So.
No, that's great. Yeah, no, I'm a man of action too. If I wish that, education, had that different type of school settings, where the people that need only 30% love to take the action, take a step back, reflect, and keep moving forward. So
exactly.
That's awesome. Yeah, so let's move right into chapter 1. So why real estate, you call it. And so how do we shift from our traditional mindset of saving from our retirement, and what are the benefits of real estate for you?
So real estate is the main creator and generator of and maintainer of wealth. And it's been that way for years and years, decades and decades. I think it's 85% or 90% of all wealth was created or maintained or grown within real estate, and that's globally in the world. And there's a few different reasons for that, and it's because real estate is a very good wealth accelerator, because you can make money off real estate in more than just one way. So if you're just saving money, you're actually losing money. Because of inflation. So if you're just literally putting money away, and that money just, even if you put $100,000 away underneath your mattress 10 years later, that 100,000 isn't worth 100,000 anymore because of inflation and the prices and everything going up, right? So if you're just saving, you're actually losing. And that's why Robert Kiyosaki says that savers are losers. I know it sounds harsh, but that's the reality of it, right? And so you have to put your money into some sort of investment vehicle that's going to grow over that rate of inflation, which I believe right now is about 3%. So if you're not making 3% return on your money, you're actually losing money. So what do a lot of GICs and cash deposits and mutual funds, what's their typical rate of return? GICs, they don't even get up to 1% for the most part. That kind of stuff. Mutual funds, maybe 3-5% if you're lucky. So those are really the traditional financial investments. But with real estate, I mean, you could get 10% just off of the cash flow alone. Mm-hmm. And when I say cash flow, that's the profit that you put in your pocket at the end of the month. After you collect your rents and then you pay out all your expenses, including the mortgage, property taxes, insurance, et cetera, any repairs, whatever's left over is your cash flow. There's a lot of properties out there where you can get 10% just on the cash flow alone, especially out there. You're in the States, correct?
Yes. Yep.
Yeah, especially out there in the States. In Canada, it's a little bit harder to get 10% on just cash flow, but okay. I know out there you guys have phenomenal cash flowing properties there. So I've had a few buildings out in Indianapolis, actually, that I don't have them anymore. I sold them, but those were cash flowing really well. So yeah, you got cash flow number one, right? That's one way that you make money in real estate. And then you have mortgage pay down. So equity is broken down into a couple of different parts, and that's mortgage pay down. Mm-hmm. So that's your renters paying your mortgage down for you. So then your equity is actually increasing in that property. And then appreciation, whether it's forced appreciation or natural market appreciation, you're also building equity that way. Mm-hmm. And then the third way is, there's a lot of tax advantages in real estate. Let's be realistic, right? So that's also another, because it's not about how much money you make, it's actually about how much money you keep. So if you're saving money on taxes because of the advantages that real estate allows you to do, you're keeping a lot more in your pocket. Yeah,
those are some amazing benefits. So I think, as soon as you read that, Kiyosaki book and it got you on that path of, investing in real estate as opposed to just saving, you have a mindset shift. And, another one of the benefits in chapter 2 you talk about is, really understanding leverage and how we can use that leverage to, create cash flow and ultimately financial freedom. Mm-hmm. So how do you use leverage today in your real estate investments?
So I use a lot of leverage. So leverage is a bit of a double-edged sword. It can be your best friend or it can be your worst enemy. And you to be able to use leverage properly, you really have to have the proper knowledge and the proper skills and the proper training, because it can really, really quickly get you in trouble. So a lot of people will say, oh, leverage this, leverage that. I would say be very careful. Make sure you're trained properly. Make sure you have the proper knowledge before you start over leveraging yourself. Mm-hmm. Well, number one, you should never over leverage yourself. So that's one mistake a lot of new investors make, is they're 100% leveraged, and that can be very, very dangerous. So leverage basically. So I outline a lot of this in my book, but leverage is pretty much instead of buying a property, say it's $100,000, instead of buying that all in cash, right? I would rather pay $10,000 as a down payment and use the bank's money to leverage the rest of that 90%. Or I would even take that 10% that you need for the down payment, pull it out of a line of credit that I'm only paying 5% on, which is the same mortgage rate you're getting at the bank anyway. At that point, you're 100% leveraged. So that's what I mean by zero money down. So you pretty much bought that property for free using 100% of the bank's money from your line of credit and then from their mortgage.
Great. Yeah.
And when you run the numbers on something like that, and I give examples in my book, if people have read it, if not, check it out. But I give examples in my book there on why leverage actually increases your rate of return, your ROI, your return on investment, and it's broken down there in numbers with examples as well.
Mm-hmm. Yeah. So when you quote unquote over leveraged to 100%. And I'm assuming you're still taking in that the asset is still cash flowing and paying itself.
Oh yes, yeah,
Yeah,
definitely. Cash
yeah,
flow is king.
yeah,
You got to picture cash flow as sort of your lifeblood, right?
yeah,
So equity is sort of like your muscle. If you're doing renovations, you're doing a value add in your projects. It's sort of like working out and building more muscles.
yeah.
Equity, cash flow though, that's your blood. So if you're bleeding out and you're getting negative cash flow every single month and you're bleeding out a lot, eventually, like, it doesn't matter how big your muscles are, because you're gonna bleed out and die, right?
Yeah,
So
yeah.
cash flow is king. It has to be managed very, very carefully. That's also another mistake. I don't really want to talk about the negatives and mistakes, but people love to hear, what's the biggest mistakes a new investor can make? Well, cash flow management. That's
Yeah.
one of them as well. So
Okay. No, it's great. So let's talk about how money follows the right deal in chapter 3. So how does money find us if the deal is lucrative enough?
well, when I say money follows the right deal, and money will find you if the deal is good enough. I don't. That doesn't mean you sit in your computer at home and crunch numbers and figure out good deals. You got to be out there. You got to be networking. You have to. It's a lot of the money that I've raised is all from networking. I don't. I've never been good at marketing and sending out flyers and stuff. I actually don't do that. A lot of the stuff that I do is all through networking and relationships. Whether it's raising money, whether it's finding the right deals, it's all done through networking and relationships. Just connect one dot to another, and one person brings you a deal. You find another person where that deal works for them, and then you can raise some money that way. But imagine it this way. When I say money follows the right deal, and here's why. There's a lot of money in the world, so we have to, number one, get away from the scarcity mentality that there isn't a lot of money out there, and we're always in a position of lack, right? Where we always think everything is lacking. There's actually a lot of money out there. There's a lot of free money floating around out there, waiting to be used. You just got to go out there and meet the right people. You got to network, be professional, go out to just put yourself out there, right? And network and meet these people, because there's a lot of money out there, and people are using money to buy all kinds of stuff, liabilities, cars, like everything, the toys like ski-doos and snowmobiles and whatever else, right? Those assets depreciate, and people are using their money to buy these things. So when you go up to somebody that has that money and you tell them, hey, why don't you, instead of paying $100,000 for that brand new Mercedes Benz that's going to be worth $50,000 in 3 years, what if you let me use your $100,000 and I turn it into $150,000 in the next couple of years? Mm-hmm. You think that person is going to say yes or no?
There
right?
you go. Yep.
By the way, with the amount of return that they get, say you put them into an investment where they're making $2,000 a month in cash flow from investing that $100,000 with you, that $2,000 a month, they could very easily lease that Mercedes Benz for $2,000 a month or less. So there you go. Their money's growing, and they got a free car. So and it all takes just a little bit of thinking outside the box. Yeah. And that's why I say in the beginning that communication skills is very important, because you have to know how to communicate that. Why would the person want to give you money? You have to know how to sell the advantage of that. And that's all done through, relationship skills, like communication and sales skills, which are all relationship skills. It's all people skills.
Well said. So once we have the money, so what are the 3 parts of every real estate investment puzzle?
So you got to have the right deal. And of course, you got to have the money, right? Mm-hmm. It just doesn't have to be your money. When I say zero money down deals, it doesn't have to be your money, right? That's zero money down for you, but it's not necessarily zero money down. It's not necessarily a zero money down deal. Of course, sometimes you still can find some zero money down deals where the owner is willing to do 100% financing, but not that often. So you got the deal, you have the money, and you also need the people. So very good way to sell that is you have the deal, you're the person who's going to put in the grunt work and making that deal work with your specialty of knowledge and skills and real estate investing, and you can find that money, and that money is typically somebody that has the money but doesn't know much about real estate or doesn't want to take the time to do anything in real estate, because it takes a lot of time and it takes a lot of energy and effort, right? Like a doctor that has hundreds of $1,000s in the bank, he wants to just give somebody that money and watch that money grow. He doesn't want to have to do the work. He's busy enough, saving lives in the hospital, so he doesn't have the time to do all that work. And that's when you come in as the person to do all that work for them.
Yeah.
So it's money, people, and the deal.
Great. Now, Chapter 4, you talked about the art of the creative real estate investing. So where'd you find your thinking outside the box mindset?
I think I've always been an outside the box thinker. It didn't do too well in school, in traditional education, but it seemed to have worked. And as soon as you get out there in the real world, I've always been very creative and I've always been a bit of a problem solver, although my calculus grades wouldn't be proof of that. But I've always been a bit of a problem solver. I always like to think outside the box. And you can, it's not a skill or a mindset that has to come only naturally. I mean, it's something that can be learned and acquired by people as well. So in order to have that outside the box thinking, you really just have to be very, very mindful of what's going on, be mindful of not only your needs, but everybody else's needs. Otherwise, if for example, you're trying to buy a building creatively through the seller, and you're trying to get a vendor take back from them, you have to have their best interest in mind too, not just yours, not just because you're going to have an advantage if they give you a vendor take back. You have to be able to be mindful of their needs as well. Why would they give you a vendor take back even, right?
Okay.
And there's a few different reasons why they would. They can defer their taxes for their capital gains, and and then they can they can make interest on that as well. So there's a lot of different reasons why they would do that, and you just have to be mindful of what other people's needs are, not just focus on your own, and always be a problem solver. So always think about, okay, if this is the problem, a lot of people are very problem focused, and very few people out there are solution focused. A lot of times we see a problem and we let that problem bring us down, whereas we should just continue to think about, okay, that's the problem, can't do anything about it right now, that can't change anymore, but what can I do about it to solve that problem? And then you just start thinking from there. Like I like to actually have a tie pad. I call it the tie pad, Tai Lopez pad, the flip board.
Okay,
and I like to doodle on that when I'm trying to solve a problem. I just like to doodle on that, right? And just think of different ways, and it's brainstorming a solution to that problem. That's the way that my mind works. If I'm I'm very visual. So if I'm doodling on something and I'm writing something down, okay, well, what about this, and I'm doing arrows all over the place. That's sort of how my mind works. And then eventually you find a solution, or you find a few solutions that you can try at least.
Yeah. No, it's amazing. And I used to be a teacher, and we ran a character education program. And the first rule to solving problems, there were 6 steps, but the first step was identify it and then name possible solutions. So I love that pad, and don't judge them. Just throw those ideas out to see what can work.
Exactly. Yeah. Oh, whatever pops up in your head, throw it up on that type pad and see what happens.
Yeah. No, I love it. So you talked about this in the book. So what are your 5 rules of creative investing?
So the 5 rules is, number 1, you got to find the right deal. Like I said, you got to be a problem solver to find that right deal and to make that deal work. Be mindful of what the sellers or the buyer's needs are, or the investor's needs if you're raising capital. So just be mindful of what other people's needs are, not just about what you're looking for and what you need. Think about what other people need. Think about how you can bring value to other people, and then value will in turn automatically come to you. If you're always thinking about how can I be of value to somebody else, you will receive value tenfold. Like it's the more you give, the more you receive, right? So it really is that way, and you have to have that sort of mindset. And not even be calculating about it. Don't give value just because you know you're going to get value back. You just have the mindset where you're always trying to provide value to everybody else, and then it'll automatically come to you. It's just good karma. That's all it is.
Yeah.
Rule number 4, I would say, is don't over leverage yourself and maintain a safety net. So always have contingencies planned. When new investors get into real estate, after theoretical training that they receive from seminars and stuff like that, all the time, and it never fails, but they will very, very quickly learn that nothing goes according to plan. So you always have to have some sort of safety net. For example, if you think you only need $50,000, you need to raise $50,000 to get a deal closed. I would raise $100,000. I always double what I think I would need to get something closed. If it's better to over raise than to under raise. So that's from the raising the capital standpoint. Don't even get me started on maintenance of the property and all this stuff. A lot of people are very over optimistic. I like to find a way. When I'm looking at a deal, I dissect that deal and I try to make that deal not work.
Really? Okay.
I will literally try to make that deal not work. What are all the different things that can happen so that this deal can't work? I will literally try to pick that deal apart. And if it still works after that, then it's got to be a good deal.
I love that stress test.
Right? Yeah, that's what it is. It's a stress test, right?
Yeah.
And the last rule is you got to just put in the work, put in the hustle. Learning and increasing your knowledge and taking all these seminars is one thing, but you got to really take action and put in the work. Got to get those hands dirty, because if you don't get those hands dirty, and I don't mean you literally have to swing a hammer. I've never look at my hands. These are not hammer swinging hands, but you got to put in that work. You got to put in that hustle.
Yeah.
That's probably that's the secret sauce, like right there. It's the one thing that you got to really put in the work, because it doesn't matter what you learn and how many books you read or how many seminars you take. If you don't put in the work and take action, it's all just good knowledge.
Yeah.
But it's never applied.
Great. So let's start applying it. So in Chapter 5, you talk about the lease with option to buy. So can you explain the key benefits of this arrangement to listeners?
Yeah, so basically a lease option, a more familiar term for people out there, I think, might be rent to own.
Okay.
So that's pretty much what a lease option is. So you're leasing the property and you've already predetermined that you have an option that you can exercise legally to purchase that property after a certain term. So this is a really, really good way to get into properties with for little money down. Right? If you don't have a lot of down payment saved up, and you can't raise capital from anybody yet, you haven't built your network quite yet, but say you might have $5,000 to leave as a deposit to the seller. Well, why don't you lease that property from the seller first, right? Pay a little bit more every month, right? So that's pretty much how it works. You pay a little bit more every month than what the market rent is, and that goes towards building your down payment over the course of 3 years or 5 years or whatever you set the term to be. So it's basically dividing the down payment that you would need over a term of 3 years. That's pretty much what it is. That's
great.
And then you exercise that option to buy, and you get credited all of that extra payments that you've made every single month. And then you don't have to come up with all the money. In the meantime, you already own the property, or you have control of the property from day one. Right? Good. So as soon as you lease the thing, you can actually go and lease it out to somebody else. So that's called a lease option sandwich. And I believe that's outlined in my book as well. And so you can actually already rent it out to somebody else because you have control of that property right from day one.
Awesome. Now, any potential problems that you've run into with that option?
A lot of times is, well, not a lot of times, but sometimes what happens is that if you're doing a lease option to somebody else, and you're selling that lease option to somebody else, if you're coming from the seller side, they have the one problem that can come up is that your buyer might not be able to qualify for the mortgage even after that 3 years.
Okay.
So you sort of have, if you're doing it that way and you're doing a lease option, as from the seller standpoint, you really have to take care of your buyer's financials and make sure that you vet them properly, and make sure that they can get approved. Like, take care of, you're sort of like a financial advisor throughout their lease option term. For that 3 years, you're pretty much babysitting them, making sure that their finances are kept in order. They're doing everything that they need to do in order to be to qualify for that mortgage after 3 years. Because coming from a seller standpoint, you do the lease option to somebody that needs to buy a house but can't, like, as their own home, right? But they can't be approved for a mortgage yet. Maybe they went through bankruptcy or something like that. So you're giving them value that way by giving them the lease option.
Okay.
That way they can own their own home.
Yeah, no, that's great. This is a topic that, might be above the beginning investor, but let's talk about joint venture partnerships and, how can partnering with someone power up our real estate investing?
So joint venture partnerships, that's really, I would say that's like the holy grail, because when you're joint venture partnership, when I say you got the money, the person, and the deal, my joint venture partnerships have been, I find the deal, I do the work. My joint venture partner is very passive, so it's a passive investor that you partner up with, and then he just puts the capital in, and then you do the work, and you give them you guys split the returns at the end. Mm-hmm. So that's once you can start doing that, then you're really doing zero down deals all the time, because to you it's zero down, but you're still putting in, you're still putting in the 10-20% down payment that you need to qualify for that mortgage. Even if you don't have your own credit, by the way, get your joint venture partner can hold the title for you. So you don't need your own cash, you don't need your own credit. You just have to have the knowledge and the skills to make these things happen.
Mm-hmm. Now, talking about the unique strengths each partner should bring, is that typical in that scenario that you find someone that doesn't have the time or the knowledge but has the capital? Okay.
Yeah, exactly. So when I first started doing joint venture partnerships, a lot of my investors that I found were in the medical field, so doctors. Mm-hmm. So that's why I always give that example, because that's by experience from me. That's those are the people that they have the money, but they don't have the time or the knowledge, or they just don't want to. They just want to grow that money passively. So what you want to do is you want to find passive partners. Passive, I call them money partners. Mm-hmm. Right? People with money that want to grow their money. They know the value of real estate, or you can teach them what the value is that you bring, and then they would make them want to invest with you.
Definitely.
Rather than somebody else.
Yeah. No, it's well said. So tips on finding the right partner, and you spoke about this in the book, and I love this. Should they possess the same personality?
So same skill set and same personality, two totally different things. So I'll start with that.
Yeah.
I like to partner up with somebody with a different skill set.
Okay.
So for example, if I wanted to partner up with somebody for a property that, say, needed a lot of renovations, I would partner up with somebody that's done a lot of project management, like a contractor or something like that, right? So my company, we actually have in-house construction and renovation, because one of the company partners is a contractor for like almost 30 years. So it's one of the company partners. We have in-house construction. That's an advantage that we have. But yeah, so you want to partner up with somebody with a different skill set, different personality. That's a little bit tough to say, because if you have too much of the same personality, there can be a lot of clashes. But you just gotta. It's all people skills, man. You gotta. There's always going to be butting of heads and stuff like that, and it happens. Even with me and my partners, it happens. But if you guys just remain solution focused and not get emotional, you guys will be able to work through that. And the other thing as well, if you find that in your partnership, things are getting really emotional, and there seems to be a lot of arguments and butting of heads all the time. A lot of the times, the reason is because you lack what I call systems. So you lack the systems. So when there's no systems in place that people can, like, look at big companies. They have, their what to do, a list of what to do. If this happens, this is what you do. So those are systems, right? This is what you do to prevent this, blah, 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 blah. So those are all systems. But without systems, what happens is you get a lot of finger pointing. Oh, it was you. Oh, why didn't you do this? Why didn't you do that? If you have the systems, you guys can just point to the system. And you guys won't get emotional over each other, and there won't be a lot of argument happening. Right? And then you can stay more solution focused, because you should have the system that says, if this happens, do this. Yep. So let's focus on the solution and let's just fix that problem.
Oh, that's great. Yeah, I think that the biggest mind shift was when I read the E-Myth. Very system, oriented, and that's good to see. So, pivoting a little bit in Chapter 8, hard money and private lenders. So can you explain both of those so we can gain a firm grasp on the concepts of each?
Yeah, so those terms are a little bit ambiguous, because technically hard money lenders are private lenders. But when I say private lenders, when I say hard money lenders, I mean there's groups of individuals or companies that'll lend money as long as the deal is right. They have their own standards, they have their own systems. They're very systemized. It's a company, right? So those are high interest lenders. A lot of times it really differs everywhere, but a lot of times it's about 12 to 15% here where I am. Yep. And when I say private lenders, what I actually mean is people that you just meet privately, whether angel investors or family and friends or friends of friends, or somebody you met at a networking event that you managed to build a good business relationship with. So that's what I mean by private investors, people you personally know, not necessarily an entity or a company that you can literally search up and if you need like hard money, right?
Yeah.
And the advantage of, I like private money the best, like not through companies, but people that I know personally, because I'm very relationship driven. I think that's the most important part in business and life is relationships. So a lot of times you can get away, like I said, like the companies, they'll have their own standards. So they might only lend to you 65% LTV or whatever else, right? But if you go up to somebody and you know them and they know you and they like you and they trust you, you could even get 100% of the purchase price, right? They might even lend you 100%. It's really up to you, and it's more flexible. It's whatever you can pitch and whatever you can sell.
Yeah.
Whatever you can negotiate is what you get. So that's what I like about private lenders. And when I say private lenders, that's what I mean. So to clear that term up, because technically hard money lenders are private lenders, right?
Yep.
So.
No, I love that. That's a great chapter, Chapter 8. I love the difference for me, in my experience, it was starting out with hard money and moving to private money, after you built that track record. So
exactly, yeah.
So the conclusion of the book, it says, make $1 million. So now that we have all this information, knowledge is no longer our problem. So now we need to find the right solution. So what do you recommend the listeners do next in terms of mentorship?
So mentorship is, I would say, a lot of people overlook that. A lot of people say, oh, I can get all this free information online, and they don't want to pay for mentorship. Not that you really have to. It really depends on the person. But what I find is most people do need mentorship. They do need that hand-holding. They do need somebody to guide them right through their first deal. A lot of people can't just take a lot of all this free information online and Bigger Pockets and stuff like that and other podcasts and then apply it, right? They need somebody to be there with them to help push them over that edge. Like you're asking, what can somebody do to get over the fear and actually take action? Well, knowledge is one thing, but what I know from experience is a lot of people, even if they have that knowledge, they're always wanting to seek more knowledge. And it's not necessarily the knowledge because they can't get that more. It's just that they need somebody to be there with them and take that first step with them.
Well said. No, I think that's, like you said, getting that meter. If someone's just, pulling you gently forward a little bit, coaches, things like that, teachers, we have them all throughout high school. As soon as we leave, college, it kind of disappears.
Yeah, exactly. So like
Yeah.
for me, for example, I don't think I would ever have gotten to what I'm doing now if it wasn't for my mentors. Like I
Hmm.
have many mentors. I've spent hundreds of thousands of dollars on courses and mentorship and coaches and coaching.
Hmm.
It's you have to invest. The best investment is investment in yourself. So a lot of people say they're missing this part. They'll see somebody that's doing well in a particular field, but they don't know how much that person has invested in himself to be doing that well in that field.
Hmm.
Like for example, like a doctor, like how long do they have to study for?
Yeah.
And how much does med school cost, right? They invested in themselves a lot before they were able to become doctors. And it's the same thing in business. You have to invest in yourself. It's harder for people to grasp this in general business because there's no traditional way of doing it.
Hmm.
Reading books is one thing, and taking courses and seminars is one thing. But I think to take things to the next level, you really, like most people, need that one-on-one mentorship with somebody.
Yeah. Yeah. Well said. I love that. I'll echo that again. The best investment is investment in yourself.
Absolutely.
Yeah. And this, I love this in this chapter. It kind of like it clicked. Just it stopped me in my tracks when I read it. And you said, something along the lines, what's the difference between simple and easy?
Yes. So a lot of things are simple, right? If you have systems in place and if somebody told you, okay, this is how you do it, right? And this is the way to do it. It's very simple. If you follow these steps, you'll get this result. Very, very simple, right? But no one is saying that along that path, during that entire path, that things are going to be easy. Yes, it's simple. If you follow this step to this step to this step to this step to this step, you'll get this result.
Mm-hmm.
That's very, very simple. It's very, it's simplified. But during that whole path, it's not going to be easy. You have to put in the work, right? And you have to continue to grind and to continue to keep yourself up. And you're going to fall in various places along that pathway. And you just need to pick yourself back up and keep on taking that step forward. So that's the difference between simple and easy. A lot of things are simple. If you do it this way, follow these instructions and follow the system, you'll get this result. But it's not going to be easy.
I absolutely love that. That was just amazing. I think that's worth the price of the book alone, just that chapter. Yeah. So what's the secret spice? The last question before we wrap things up.
So the secret spice, there's not that one thing, right? Everyone's always asking for that one thing. Yes, you got to hustle. So that's that's the secret spice. You got to put in the work. You got to have that grit to keep on going and to pick yourself up no matter how many times you fall down. But you also have to have the right mindset. Because you can put in all the work that you want, but if you don't have the right mindset, it all starts from the mindset. Whenever I coach anybody, we start with mindset training. That's really the foundation of everything in life, is having the proper mindset for what you want to do. And whenever I'm mentoring somebody, we always start with that. We actually don't get started on anything until he's got that right mindset.
Great.
So, that's the foundation. You got to have the foundation. Build your house on a foundation of rock and not a foundation of sand, right?
Yeah.
So the right mindset is a foundation of rock.
Yeah.
Got to have that down before you start doing anything else. Before you lay that first brick up, you got to have the right foundation.
Great. No.
So that's what I would say would be, the main takeaway. Have the right mindset and put in the work.
Amazing. No, wise words, Nico. Great book on creativity. I loved it. That secret spice, hustle, and simple and easy, and making the right decisions. That's you got to start with the foundation. You're completely right.
It all starts with that.
Everything's said.
Yep.
Yeah. Well, thank you so much for being on the show today. I really appreciate it. And you want to tell the listeners where they can purchase the book and find out more about you?
Yeah, so you guys can you can get it through my my landing page, my website, nicosanchez.ca. That's Nico Sanchez with a Z at the end, or Z for the American listeners out there. .ca. That's .Canada. Or you guys can just search it up on Amazon. There's the Kindle. You can purchase the Kindle, or you can purchase the paperback on Amazon. Just search for Creativity Over Capital, and you guys will see the book there in the background. That's what it looks like on Amazon. Yeah, you can purchase it through those two ways.
Sounds great. No, I really appreciate it, Nico. Thank you very much for your time.
Thank you, Scott.
All right. Take care.
My pleasure. All right. Take care.
And that concludes our book club interview with author Nico Sanchez, who wrote the book Creativity Over Capital. This is a great book for a beginner to an intermediate investor. It has a lot of down-to-earth, real foundational knowledge that I think every investor and business owner needs. Nico talked about the mindset shift, building relationship skills and networking appropriately, using leverage correctly, how cash flow is your lifeblood, how money follows the right deal, his 3 parts of every real estate investment puzzle, and also his 5 rules of creative investing. I highly recommend you check it out. You're going to gain a lot of useful information. Even if you already know it, it's good to refresh. And I find it that I love having, every book on my shelf just so I can refer back to it at any point in time. That's it for this week. Make sure you like our Facebook page so you can stay up to date on authors that we're interviewing and the content that we're putting out. My name is Scott Hollister, your host, and we'll see you next time.